Every new trader starts the same way. We look for the next magical indicator, the guaranteed signal provider, or some secret entry point that will turn our small account into millions. And for a while, it feels exciting. You copy signals, you follow others, and maybe you win a few trades. But then comes the loss, then another, and suddenly the dream feels like a scam. But here's the reality: signals will never make you rich. Discipline will. Most traders fail in Forex, not because they don't have signals, not because they don't know strategies, but because they don't know THIs. Every day, people chase after so-called profitable signal providers. They copy trades, they buy indicators, they look for shortcuts, and yet 95% of them still blow their accounts. Why? Because signals are not the key. The real secret, the real path to Forex success, is something far more powerful, something most traders ignore. In this video, I'm going to reveal why discipline, not signals, is what separates the winners from the losers. By the end, you'll understand exactly why you've been stuck and how mastering this one principle can change your entire trading journey. Stay with me, because if you've ever wondered why success feels so far away, what I'm about to share will open your eyes and give you the clarity you need to finally win. We are going to discuss 6 points. Point 1: signals don't guarantee success. When most people first step into the world of Forex, they are excited by the promises. They hear stories about signal providers who can give buy and sell alerts that supposedly guarantee profits. They join Telegram groups, subscribe to expensive services, and wait for those magic notifications that say, buy EUR/USD now, or sell GBP/JPY here. And for a little while, it feels like you found the secret. You win a few trades, maybe even double your account in a week, and you start thinking, this is easy. I don't even need to learn how to trade myself. I'll just follow signals. But then something happens. You take 3 losses in a row, or the market reacts to unexpected news, or the person giving you signals disappears overnight. And just like that, your dream of easy money collapses. Why? Because signals don't guarantee success. Signals are nothing more than suggestions. They may be based on analysis, they may come from someone experienced, but they are still just entries and exits. And here's the truth: an entry and an exit alone are worthless without a trader's discipline. Think about it. If 2 traders are given the exact same signal, say, buy EUR/USD at 1.0900 with a target at 1,000 and a stop loss at 1.85 Y, they will not get the same results. Trader A may risk his entire account on this one trade because he's desperate to get rich quick. Trader B, on the other hand, risks just 1% of his account, calmly sets the stop loss, and follows his plan. The same signal, 2 completely different outcomes. What does this show us? That signals are not the secret to Forex success. The trader's mindset, discipline, and risk management are what determine the outcome. Here's the brutal reality: if you depend only on signals, you will always remain at the mercy of someone else. You will never have confidence in your own decisions. You will panic when trades go against you because you don't understand the why behind the signal. And worse, you will blow your account again and again because signals don't control your emotions, you do. Signals can help in learning. They can give you ideas. They can show you different strategies. But they cannot trade for you. They cannot stop you from over-leveraging. They cannot stop you from revenge trading after a loss. They cannot stop you from moving your stop loss because you hope the market will reverse. And that is why signals don't guarantee success. Success in Forex isn't about having the perfect entry. It's about how you handle the trade once you're in it. Do you manage your risk? Do you accept your losses? Do you let your winners run? Do you stay calm under pressure? That's discipline, not signals. The traders who succeed in Forex long-term aren't the ones with the best signals. They are the ones with the best habits. They manage risk like professionals. They keep their emotions in check. They stick to their plan no matter what. So if you are a beginner and you think signals will make you rich, I want you to pause and really understand this: signals are tools, not solutions. They are crutches that can support you for a short time, But if you never learn to walk on your own, you will never survive this market. Stop chasing the next magical signal service. Stop believing that someone else can trade for you. Start building your own discipline, your own mindset, your own plan. Because once you do, you won't need signals. You'll become the signal. And that's when you'll finally see what real Forex success looks like. Point 20: discipline is the real edge. If you ask most new traders what gives someone an edge in the Forex market, they'll probably say a secret indicator, a profitable signal service, or an algorithm that never loses. They think the edge is some external tool, some shortcut that will give them guaranteed wins. But the truth is, none of these things are the real edge. The real edge is discipline. Why? Because every trader, whether beginner or professional, has access to the same charts, the same indicators, and the same market data. The market doesn't hide anything. There's no secret line or magical formula that only a select few know about. What separates the 5% who succeed from the 95% who fail is not their signals, not their strategy. It's their discipline to stick to their plan even when emotions scream otherwise. Think about this: the Forex market is driven by fear and greed. Prices rise and fall because traders all over the world are reacting emotionally, chasing profits when the market goes up, and panicking when it goes down. If you can master discipline, you gain an edge over 90% of participants because you no longer move with the crowd. You move with your plan. Let's look at a simple scenario. A trader sets a stop loss at 1.0850. The market moves against him and price starts to approach that level. Panic rises in his chest. His brain tells him, maybe I should move my stop loss a little lower. Maybe it'll reverse if I just give it some room. So he breaks his own rule and shifts the stop loss. What happens? The market keeps falling and he loses far more than he planned. Now, compare this with a disciplined trader. Same setup, same stop loss. The market moves against him too. But instead of panicking, he takes a deep breath and reminds himself, losses are part of the game. My job is not to win every trade. It's to protect my capital and follow my plan. He lets the stop loss hit, accepts the small loss, and waits for the next setup. Over time, this trader survives, grows, and thrives, while the undisciplined one blows his account. That's the difference discipline makes. Discipline is the ability to stay consistent with your rules, even when your emotions tempt you to break them. It's waking up every day and following your trading routine. Whether you feel motivated or not, it's sticking to your risk management plan even after a losing streak. It's walking away from the charts when your plan tells you to stop trading, instead of chasing losses. And here's the key truth: strategies can stop working. Indicators can fail. Market conditions can change. But discipline never goes out of style. No matter what happens in the market, discipline will always protect your capital and give you another chance to win tomorrow. Some traders think discipline means restriction, but in reality, discipline equals freedom. When you are disciplined, you don't stress over every trade. You don't feel desperate to win back losses. You don't constantly look for the next magic system. Why? Because you know that if you stick to your rules, you will succeed over the long run. The undisciplined trader lives in chaos, constantly reacting, constantly stressed, constantly emotional. The disciplined trader lives in control, calm, patient, and consistent. So ask yourself right now, what do you want to be? Do you want to be a gambler who hopes and prays for signals? Or do you want to be a professional who treats Forex like a business? The answer will determine your future. Never forget this: discipline is the real edge. It is stronger than any signal, indicator, or algorithm. It is what keeps you in the game when others quit. And in Forex, survival is everything. Because the longer you survive, the more chances you have to win. Master discipline, and you will master the market. Point 30. Risk management matters most. If there is one principle that separates professional traders from beginners, it is this: risk management matters more than anything else. Strategies can fail, signals can mislead, emotions can run wild. But proper risk management will always protect you from total destruction. Most new traders think Forex success comes from predicting the market. They believe if they can just find the perfect entry signal, they will win consistently. But let's face the truth. No one can predict the market all the time. Even the best traders in the world lose trades. The difference is that they lose small and win big. They protect their capital first and profit second. That's risk management. So what does risk management actually mean? At its core, risk management is about controlling how much you can lose on a single trade, on a series of trades, and in your overall account. It's the safety net that prevents you from blowing up when the market turns against you. It's the discipline to risk small, even when you feel tempted to go big. Let me give you a scenario. Imagine two traders, both with $1,000 in accounts. Trader A risks 20% per trade because he wants fast profits. Trader B risks only 1% per trade. After 5 losing trades in a row, Trader A has lost almost his entire account. Trader B, he's down only 5% and still has the ability to fight another day. Do you see the difference? Trader A chased riches. Trader B protected longevity. And in Forex, longevity is the real key. The market will always give you another opportunity, but only if you're still in the game. Risk management also means setting stop losses and sticking to them. Too many traders set a stop, then move it when the market goes against them. That's not risk management, that's gambling. A proper stop loss says, if I'm wrong, I'll take a small hit and move on. That's what keeps your account safe. Another element of risk management is position sizing. You must decide how much of your capital you're willing to put on the line per trade. Professionals risk 0.2% of their account. That way, even if they lose 10 trades in a row, they still have over 80% of their account intact. Amateurs, on the other hand, risk 10-20% or more. A losing streak wipes them out completely. And here's something most people don't realize: risk management is not about limiting your profits. It's about protecting your ability to profit in the long run. Think of it like this: if you blow your account today, you have no chance of winning tomorrow. But if you protect your capital, you live to fight another day, and eventually, you catch the big moves that change everything. Risk management also shields you from emotional decisions. When you know you're only risking 1% of your account, you don't panic when the trade moves against you. You don't feel the urge to move your stop loss. You don't obsess over every pip. Why? Because you know one trade can't destroy you. That mental freedom is priceless. Many beginners ignore risk management because it feels boring. They want excitement. They want big wins. But professional traders know that Forex is not about excitement. It's about survival and consistency. It's about staying in the game long enough for probabilities to work in your favor. Remember this rule: protect your capital first. Grow it second. If you risk too much, one bad day can erase months of hard work. But if you risk small and manage wisely, even a bad month won't break you. And when the winning streak comes, your account will grow steadily without the fear of sudden collapse. So, let me leave you with this: in Forex, you are not a warrior trying to conquer every battle. You are a survivor playing the long game. Those who survive the longest win the most. And survival is only possible with proper risk management. Risk small, manage wisely, and you will last long enough to taste real success. Point 40. Process over outcome. One of the biggest mistakes traders make is focusing too much on the outcome of a single trade. They obsess over whether today's position will win or lose, and their emotions swing wildly with every pip of movement. If they win, they feel invincible. If they lose, they feel like a failure. This obsession with outcomes is the trap that keeps most traders stuck. But the truth is, this Forex success is not about one trade. It's about the process. Trading is a game of probabilities. No matter how good your strategy is, you will never win every trade. In fact, even the best traders in the world only win around 50-60% of the time. So if your mindset is based on being right every time, you're setting yourself up for frustration, revenge trading, and eventually blowing your account. Instead, you need to shift your focus. Don't measure success by whether one trade wins or loses. Measure success by whether you followed your process. Did you stick to your plan? Did you manage your risk? Did you stay disciplined? If the answer is yes, Then you succeeded, even if the trade itself lost money. Let me give you an example. Imagine you take 100 trades. Your strategy has a 50% win rate, but your winners are twice the size of your losers. Out of 100 trades, you lose 50 and you win 50. But because your winners are larger, you finish with a net profit. That's the power of focusing on process instead of outcome. Each individual trade doesn't matter. The series of trades does. Now let's imagine another scenario. A trader ignores the process. He chases random trades, risks too much, and lets emotions dictate his moves. He might win today, he might even win tomorrow, but over 100 trades, he is guaranteed to lose. Why? Because his process is broken. The market doesn't reward luck, it rewards consistency. And consistency comes only when you focus on the process. Here's another key point: when you focus on outcomes, emotions take control. You start to fear losing, so you hesitate to take good trades. Or you get greedy after a win, so you over-leverage on the next one. Your decision-making becomes clouded, and you sabotage yourself. But when you focus on process, emotions lose their power. You stop caring about one trade, and you start thinking long-term. That shift changes everything. A disciplined process includes a clear strategy that you trust, predefined risk management rules, a trading journal to track progress, a routine that you follow every single day. When you follow this process, you free yourself from the obsession with being right. You understand that losing trades are not failures. They are part of the game. Just like a casino doesn't care about one hand of blackjack, you shouldn't care about one trade. What matters is the law of large numbers, the overall edge over time. Think of it like a professional athlete. A basketball player doesn't obsess over one missed shot. He focuses on his training, his form, his routine. Over the season, that discipline pays off. Trading is the same. It's not about one shot. It's about playing the game consistently. So, the next time you take a trade, don't ask yourself, will this trade win? Ask yourself, am I following my process? Because if you are, you're already winning. Even if the market goes against you, the outcome of one trade is random. The outcome of 100 disciplined trades is predictable. And that's the difference between amateurs and professionals. Remember this truth: the process creates the profits. Outcomes will follow, but only if you respect the process first. Stay disciplined, stay consistent, and let the process carry you to success. Point 50. Mindset beats shortcuts. Every new Forex trader begins the journey with hope. They dream of financial freedom, of turning a small account into a fortune, of living a life with no boss and no restrictions. But in that pursuit, many fall into the trap of shortcuts. Signal providers, secret indicators, automated robots, and quick fix strategies. They chase easy solutions because discipline, patience, and consistency sound boring. But here's the truth: shortcuts never last. Mindset does. The Forex market is unforgiving. It punishes impatience, greed, and emotional decision-making. If your foundation is weak, no shortcut will save you. You may win today, you may even win this week, but without the right mindset, the market will eventually take everything back. So what does mindset really mean in trading? Mindset means you approach the market with clarity, patience, and self-control. It means you understand that losses are part of the journey, and you don't allow them to destroy your confidence. It means you stay disciplined when others panic. Most importantly, it means you stop chasing quick wins and start playing the long game. Let's take two traders as an example. Trader A relies only on shortcuts. He buys every new trading robot he sees online, joins every signal group, and switches strategies every time he has a losing week. His mindset is built on hope. He hopes that the next shortcut will be the one. But no matter what he tries, the cycle repeats: small wins, big losses, frustration, and eventually quitting. Trader B, on the other hand, focuses on mindset. He accepts that learning Forex is like learning any profession. It takes time, patience, and practice. He knows there is no shortcut, so he works on his discipline every single day. He journals his trades, he reflects on his mistakes, and he grows stronger with every setback. Over time, Trader B becomes consistent while Trader A gives up. The difference between them wasn't strategy. It wasn't tools. It was mindset. Shortcuts make you dependent on something external. Mindset makes you powerful from within. And when your power comes from within, no market condition can break you. Mindset also means resilience. The ability to take a loss, learn from it, and come back stronger. Most traders quit after a string of failures. But successful traders view failure as tuition fees paid to the market. Every mistake is a lesson. Every loss is feedback. That perspective only comes from the right mindset. Another aspect of mindset is patience. The market rewards those who wait for high probability setups and punishes those who chase every candle. An impatient trader jumps into trades because he fears missing out. A patient trader waits for confirmation, and as a result, wins bigger and loses less. Patience cannot be bought with shortcuts. It must be built through mindset. Mindset also protects you from greed. How many traders have turned a small profit into a big loss because they refused to take profit when their plan told them to? Greed whispers, "Just a little more," and shortcuts make you listen. Mindset says, "Follow the plan," and that discipline keeps you safe. And here's the ultimate truth. Forex is not just a technical game, it's a psychological game. Your greatest enemy is not the market. It's your own fear, greed, and impatience. If you master your mindset, you automatically master the game. So, stop searching for shortcuts. Stop believing that someone else can hand you success. Begin working on the only tool that will never fail you, your mindset. Train it daily. Build resilience. Practice patience. Strengthen your discipline. Because in the end, profits don't come from shortcuts. They come from the trader you become. And the trader you become is shaped entirely by your mindset. Remember this: shortcuts may give you trades. Mindset will give you success. Point 6e: discipline leads to freedom. When most people first hear the word discipline, they think of rules, restrictions, and limitations. They imagine a life of strict schedules, no flexibility, and constant sacrifice. And in trading, many beginners believe discipline is what kills freedom. They say, "I don't want to be tied down to rules. I want the freedom that Forex promises." But here's the paradox: discipline is not the enemy of freedom. It's the path to it. In Forex, freedom does not come from chasing signals, gambling on trades, or hoping for luck. That kind of freedom is chaos. It might feel exciting for a moment, but it leads to blown accounts, sleepless nights, and endless stress. True freedom comes from knowing that no matter what the market does, you are in control of yourself, your capital, and your future. And that control only comes through discipline. Let's break it down. Imagine two traders. Trader A trades without discipline. He risks too much, enters trades randomly, and lets emotions decide his moves. Every day feels like a roller coaster. Some days he's euphoric, other days he's depressed. He has no consistency, no stability, and no real freedom. Why? Because his lack of discipline has made him a slave to fear, to greed, and to the market's randomness. Trader B, however, lives by discipline. He follows his plan. He risks only a small percentage of his account per trade. He walks away when his daily limit is reached. He journals his progress, learns from mistakes, and never allows emotions to control him. What does he gain? Peace of mind, confidence, consistency, and ultimately, freedom. Discipline sets you free from emotional chaos. When you know you'll never risk more than 1% per trade, you don't fear losing. When you know you'll follow your stop loss, you don't stress about every pip. When you know you'll take only high-quality setups, you don't feel the need to chase every candle. That calmness is the real freedom most traders are chasing, not wild profits, but peace. Discipline also leads to financial freedom. Without discipline, you will always blow accounts. You'll always be starting over, stuck in the cycle of deposit, gamble, lose, repeat. But with discipline, your account grows steadily over time. Maybe not overnight, maybe not with fireworks, but with consistency that compounds into wealth. That's the kind of growth that actually changes lives. And here's something most traders overlook. Discipline gives you freedom of time. When you have a process and you follow it, you don't need to stare at charts all day. You know your rules, you know your strategy, and you trust your plan. That means more time for your family, your passions, and your life. The undisciplined trader is glued to the screen, stressed and exhausted. The disciplined trader trades with peace, then walks away. This is why professional traders say discipline equals freedom. The more rules you follow, the more control you gain. And the more control you gain, the freer you become from fear, from stress, from financial struggle. Now, let's be honest. Discipline is not easy. It requires sacrifice. It means saying no to impulsive trades. It means accepting small losses without revenge trading. It means sticking to your plan even when you feel like breaking it. But remember, the pain of discipline is temporary, while the pain of regret lasts forever. Every time you choose discipline, you buy yourself more freedom. Freedom to grow your account instead of blowing it. Freedom to sleep peacefully at night instead of worrying about trades. Freedom to control your future instead of being controlled by emotions. So, the next time you feel tempted to break your rules, remember this: you are not giving up freedom. You are earning it. Every act of discipline is an investment in your independence. Because at the end of the day, Forex trading is not just about money. It's about freedom. The freedom to live life on your own terms. And the only road to that freedom is discipline. Never forget this: signals may give you opportunities, but only discipline will set you free.